And I think that will happen when the Fed does a pivot, when there is enough pain in these markets and the Fed does a pivot. I think they're going to print money to make what they did in 2020 look like chump change. And I think that we're already at the beginning of the hyperinflation. It goes slow, 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 then it goes fast. But you can see the prices going up all the time.
All right, hello, and welcome to Camel Finance. I'm your boy Camel, and today I want to be talking to you about hyperinflation. Is this a real possibility? Is this absolute nonsense? So let's get into this. I want to start by pointing out that from the old WEF here, in a recent article, June 13th, 2022, they were asking this: what is hyperinflation and should we be worried? Well, let me tell you, if the WEF feels the need to write something about hyperinflation, then it's on the cards. It's certainly inside of the realm of possibility. Scrolling down, you can read this in your own time. The thing I wanted to point out is this: the traditional definition of hyperinflation. In general, the term is used when the rate of inflation increases more than 50% a month. This is kind of a silly definition, because what if you got 49 or 40% inflation a month? That's still going to be absolutely crippling, but they technically wouldn't class that as hyperinflation. One thing we all kind of know these days is the consumer price index, the CPI. We know that this has been increasing, and since 47 has basically gone up in a straight line. There have been short periods of decline during big recessions and financial crises, but ultimately, as you can see, the line is up and to the right. Here we have a similar illustration starting in 2021 and working through to last month of 2022. You can see that the change in final demand from 12 months ago, unadjusted, only goes up. Until just recently, where of course we have allegedly seen peak inflation. So I want to get into that and just cover this briefly. Inflation has peaked, right? Well, this is only true when measured relative to the same month a year prior. So to make the maths easy, if we say that 1 year ago, in this month, inflation was 9%, and this month we say that we have 1% inflation, then the notion is to say inflation is significantly lower than this time last year. But that's only because we are measuring 1% compared to 9%. But keep in mind, in the real world, we had 9% 12 months ago and 1% today, meaning that inflation is still 10% up in absolute terms. So has inflation really peaked? Well, not in the real world. And you can kind of tell this just by looking around you, right? Prices are not going back down. The food that you buy that is more expensive than it was a year ago, which is more expensive then than the year prior, is still more expensive. Food is not getting cheaper. Energy, whilst we have seen petrol come down in the short term, make no mistake, it'll be going back up soon enough, right? Transportation costs have not decreased. Your rent, having increased, has not decreased, okay? And these prices are not going backwards. You notice that things only get more expensive with time. And that is because, as I said, we use these Mickey Mouse ways of measuring inflation and monitoring inflation. We never use the absolute terms because that number just goes up to infinity, right? So all these increases are here to stay. All of these rises in prices are here to stay. And I would speculate that they're only going to get worse. Inflation will likely be persistent. And this is the Fed's own words from its minutes on Wednesday. Okay, let me say that again. Inflation will likely be persistent, and that's from the Fed's own words. Just looking at commodities tells a similar story. You can see here the yellow line on the outside is the commodity price index. And look at the state of this, up in a straight line. These tiny little pullbacks are nearly unnoticeable. Now, could we expect further downside in the short to medium term? Yeah, I think that's fair to assume. But make no mistake that this is May of 2020. So even if we were to retrace 50% of this move, that is still an enormous increase. And of course, you already kind of intuitively know this, because just look at your shopping bill, just look at your energy bill, just look at your rent if you're renting. To further illustrate this point, I have a list of commodities here and the 12-month change. And you can see whether it's beverages, whether it is petroleum, whether it's coal from various regions, crude from various regions, gasoline, diesel, whether it is coffee, all of these numbers. Look at these numbers in the green column. And keep in mind, this column is the 12-month change. These are all enormous increases. Whilst they feed us this notion of 9% inflation, 8.7% inflation, in the UK 10.1%, in the Eurozone 8.9%, whilst they feed us these numbers, This is what the real world inflation on commodities looks like. Okay? So it's quite a different story. And you might see the odd one in red, such as sugar from European import price, but sugar everywhere else is significantly more expensive, right? Hyperinflation is something that goes on all around the world. Here are the top 10 places with hyperinflation, just for some context. You can see, this is in January, some of these numbers are significantly worse. Turkey is 70%, Argentina is up at 70%. So you can see some of these numbers are absolutely insane. And so it begs the question, well, what happens to things like stocks and gold and commodities during this hyperinflationary period? And how do you protect yourself? Well, one way that you can protect yourself is to own assets. I've got here an example of the Zimbabwe stock market, the Zimbabwe Industrial Index. And you can see that whilst all stocks have been cooling off of late, the Zimbabwe stock market is up 33% since the beginning of 2022. And if I take the date here, 2021, and I just go back a couple of years, say 2019, from the start of the pandemic, you can see that the gains are astronomical. Asset holders, people that had assets, such as gold, Bitcoin, commodities, property, stocks, are able to preserve some of their wealth and are able to store some of their value. Allocated in the right places, you're even able to profit from the hyperinflation. The sad truth is, this destroys people that don't hold assets. And so again, I want to reiterate that inflation will likely be persistent, and that's the Fed's own words from its minutes on Wednesday. Remember, the Fed wants inflation. It has too much debt, and the only way it can pay back its debt is to inflate it away. I'm going to show you that in just a second. And it wants people to be poor. It wants people not to own assets and be poor, because that makes them more likely to accept central bank digital currencies. So taking a look at the debt, 30.7 trillion now. Of course, you could ask the question, is this too much debt? Is this too much debt, or is this acceptable? And how do you really know? How do you determine that? Well, one way to figure out whether this is too much debt or not is to look at the debt amount relative to the gross domestic product of a nation. How much do they produce relative to their debt? And what you can see is, whilst we've had a cool off, a pullback, we're now starting to move back up. And for the US, they currently have 124% debt to GDP ratio. So what does that mean? What does that imply? Well, if you wanted to get this ratio back down, if you wanted to get this ratio into a reasonable area, there are a few ways of doing so. You could stop government spending, but there's absolutely no chance of that because the government has demonstrated over and over again it's addicted to spending. All it does is print more money and allocate it to infrastructure bills that somehow don't produce any real infrastructure. They never create anything, right? They just constantly print money and allocate money to places in amongst their friends. This is the Cantillon effect. Another way to get the ratio down would be to increase the GDP above the debt growth rate. But this would require a GDP growth of 10 to 15%. So how likely is that? What's interesting is I was playing around with this calculation when I was figuring this out. If you omit the last 12 months, then this number comes out at 9%-ish. But just in the last 12 months, they are continuing to acquire so much debt that you need to increase up to around 15%. And I would speculate that in a year or two's time, then this is going to be over 20% because they are snowballing the amount of debt they have whilst the GDP is declining. Obviously, we've had a recession print. We have had 2 consecutive quarters of negative GDP growth. So they are basically never going to be able to stop spending, and they're never going to be able to grow the economy at a rate in which they could actually pay back their debt. These 2 things are certain. And so the only way to actually lower this ratio is to inflate away the debt. They have no choice. And believe it or not, this is how the fiat currency systems are designed. This is why they have a life cycle of 80 to 100 years. This is why they all end in hyperinflation. And this is why the whole system is so predictable for people that are educated enough to understand it. This creates the illusion of growing GDP. If you hyperinflate the debt or just severely inflate the debt away, it creates the illusion of a growing GDP. However, this is not real GDP growth, but just nominal GDP. So it's an illusionary effect. And what happens in the meantime is assets like property, gold, silver, stocks, and Bitcoin all go to the moon, just like the stock market did in Zimbabwe. So again, we're seeing the same theme recurring here. Asset holders do well during periods of high inflation or hyperinflation, whilst everyone else goes broke. Whilst we currently are in a situation where they don't mind you accumulating assets, where people are free to accumulate hard assets. History shows us that in times of severe inflation, it's completely normal and not uncommon to see central banks and governments move to prohibit people from buying things like gold. And what we're seeing is this actually transfer over to the crypto market in Canada. The certain crypto exchanges have imposed a 30k CAD, Canadian dollars, annual limit on altcoin buys, and they say this is to protect crypto investors. But of course, they don't care about protecting crypto investors. What they don't want is people being able to put larger sums of money in and prevent themselves from going broke during the high periods of inflation. They know high periods of inflation are coming because the entire fiat system is engineered to end with high inflation and the destruction of the fiat currency. This is why we get a new world reserve currency approximately every 80 to 100 years. We're starting to see the scary truth that is, these people understand what's happening and they know that we're nearing the end. And the scary truth is, they do not want people to be able to take their money and add it into hard assets and put it into hard assets such as crypto. And of course, crypto cannot be confiscated. Unlike all other assets, crypto is the only asset that you can truly own. It's the ultimate bearer asset. We are starting to see that they do not want people to own this sort of thing. And make no mistake, this is probably not going away. This is most likely going to spread. They're going to prevent certain people from buying certain cryptos. This is likely only going to get worse because they do not want you to have your own sovereignty. They do not want you to have your own wealth that is protected, because if you do, then you are resistant to accepting their central bank digital currencies. So will we get hyperinflation? Well, nobody really knows, right? Whether we get true hyperinflation, whether we get severe inflation, nobody knows. But I think what we do know for sure is the inflation, even though it might ebb and flow, even though we might get periods of less inflation in the near term, then followed by periods of higher inflation, I think what we know for sure, I think what the central banks know for sure, and I think what the governments know for sure, is that inflation is only going to get worse over the long term. Prices are only going to get more expensive, and the fiat currencies are only going to get weaker as we transition to seeing the death of the fiat currency system and a move towards central bank digital currencies, which they have been telling us are coming in at the end of 2024 and early 2025. History has shown that owning things like gold, silver, property, stocks is useful in storing your wealth and holding your value over time. We now have new assets such as Bitcoin and other cryptos that are the ultimate bearer assets and that will likely function as an even better inflationary hedge. So do what you can to protect your wealth, protect your assets and store your value. Make sure if you hold crypto and gold, you hold it physical in your hand. Do what you can to protect your wealth. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, go ahead and follow me on Twitter, and if you have any questions, throw them down below. I'd be happy to answer them or discuss them with you. In the meantime, look after yourselves, look after your family, take care, all the best from me, cheers, bye.